Welcome back to the second episode of the Out of the Woods podcast. I'm super excited about our guest today, Andrew Gazdecki from MicroAcquire. I have a ton of respect for Andrew. I love following his Twitter feed. I feel like we have a ton of similarities in the sense of how we think about business and bootstrapping and efficiency and focusing on sales and marketing and the role of the founder throughout the company. And really excited to dive into your story, the MicroAcquire story, and then also how you're thinking about navigating these interesting economic times and economic environment and what it means for startups. And I also I'm super excited to also dive into what you're seeing on the MicroAcquire platform and how MicroAcquire could play a pretty interesting and pivotal role in these times as another option for founders and also investors to get access to whether it's liquidity opportunities or also to buy some interesting companies right now. So excited to dive into it.
So I mean, you have access to a lot of, I think, startup data. I mean, do you guys get the data from the companies that you're putting on the platform and listing in terms of high level financials like revenue, profit, et cetera? Like, is that something that you guys can access? So, and are you aggregating that in any way to kind of just get kind of a temperature check on businesses and different kind of categories and what their growth rates are and what profitability looks like? And if so, are you seeing anything like interesting, kind of different now this year versus last year? Or?
I would say, well, we have MicroAcquire Marketplace, and we have another tool called MicroMR, which is a startup valuation calculator that gives you basically connect Stripe. And so we can kind of have a God view of like thousands of companies. So I looked at that the other day and haven't really seen too much change. And I also read a tweet from Kyle Porter at SalesLoft, and he was saying something along the lines of
they grew like above their plan, like 57% or something, right?
Yeah. So I think it's too early to tell. I think, maybe a storm is coming, but from what we're seeing at MicroAcquire currently, we're seeing, we saw a record month of new buyers. We saw our second largest month of new acquisitions, which before we started recording, I told you we facilitated 47 million in acquisitions in June. July is already looking good in terms of seller signups, buyer signups, paid buyer signups. So not really too much, but we're looking at it consistently. But we're not seeing any sharp drop-offs. We're not seeing any sort of trends that. I guess the only trend that we're kind of definitive on, or maybe not definitive, but just kind of in agreement around, is we're seeing a surge of new buyers coming in. And that kind of makes sense. New buyers thinking, asset prices are dropping, but we also haven't seen valuation drop whatsoever.
Just because the supply demand dynamic on MicroAcquire is just so buyer heavy, you think?
No, I think it just takes time for these things to take effect is my best guess. Like, for example, the deals that close in June could have been agreed in May, and most are. And so they close them out, like the agreed terms in May, and then the closing dates are in June, and they don't reprice them or anything like that. So I think it's going to take probably like a 3-month period before we can really have a definitive, all right, we're booming. But one interesting point I can share is we've been seeing more venture-backed businesses list on MicroAcquire. So ones that have maybe raised a small seed round or, $1 million or something like that. Nothing like $5 or $10 million. So I think we're going to see probably a lot more of those if everything starts going downwards like everybody believes it is. But I don't know. I'm just an optimist, man. I'm like, who cares? I know that's probably not the right phrasing, but in these environments, entrepreneurs, it's like I launched, like I said previously, I launched my first business in a recession, didn't know about it, didn't care, kept building. I launched MicroAcquire in the midst of a pandemic. So I already went through everything's, but that that was like a 3-month period.
Yep.
Then everything started booming. And then here we are again, doom and gloom. And I think it's just how it goes, just up and down and up and down. And the best entrepreneurs just thrive in chaos, just being able to kind of turn on a dime. And when, we do see some, either positive or negative news, we're candidly expecting tailwinds. And if we, start to feel confident that those tailwinds are real, we'll hit the gas. If not, we'll probably pull back a little bit.
Yeah, I mean, I don't know. I mean, our business, specifically, we've kind of really hunkered down and gotten a lot better and more efficient and just executing at a much higher level these last few months, because we're just trying to get ahead of any sort of unforeseen kind of things that could happen down the line. And I've been so much more energized the last 3 to 6 months in the business, because it's kind of engaged me more, because 5 years ago started the business. I would say through the pandemic, we just grew so much that I was kind of on like, just kind of coasting mode a little bit, because everything was just going well, and things are still going well. But, I think that just kind of, not knowing what the future holds, being still, primarily bootstrap, just kind of really making sure the business unit economics are good, our processes are good. We've been driving NPS up a ton. Like, it's been a lot of fun kind of rolling with the punches a little bit, I think, through some of these kind of, ups and downs a bit.
Yeah, I've been doing something similar. And, I think a good way to phrase what you just said was, you're going from peacetime CEO to wartime CEO. And wartime, in my opinion, is so much funner because business is such a competitive sport. And, being able to navigate, and adjust your business on a dime, I think is what separates good entrepreneurs from great entrepreneurs, because you're always operating with limited information. Like, we're having a discussion right now, where are we going? Like, we have limited information. And all we can do is really, hope for the best, but prepare for the worst. So one thing I've been doing with my team in terms of decision making is basically a simple framework. If it's not a hell yes, it's a hell no. And then that across the whole organization has really helped hone in on, what we should really be doing. And a good example I can give is like in marketing. Like, what are we doing for marketing? We had some new initiatives that we wanted to launch, but given the uncertainty we may be facing in the upcoming months, we just thought, why don't we just focus down on the hell yes stuff that we know was working and double down on that more, rather than opening up like a new channel or something like that. And just really take the existing assets that we've already created, like, more emphasis on bootstrappers.com, more emphasis on getting people to use our MicroAcquire Slack app, or more people using our valuation tool, taking these assets that we've already built and marketing those more, rather than building another asset or, starting a new initiative that we got to, track. We're just trying to basically, take the rag and squeeze 20-30% more productivity out of what we got.
I think that's a common theme. I mean, we've been thinking about it the same way, of kind of, getting rid of experiments, not in terms of just like the experimental nature of the business. Like, you always want to be experimenting, but we were building teams and doing these random things where like there were more long-term bets. Maybe they'll work, maybe not. And then we've been more focused on like, no, let's just do the things that we know are problems that we need to solve, or things that we know are working, and do more of it. So I think, if you look at Airbnb back at the start of the pandemic, their whole playbook too is like, okay, let's cut out the unnecessary stuff, the stuff that's not core to the business, that's not all about providing the great host experience and guest experience, and just focus on these things. Because a lot of times when businesses are fat, they start to do random shit that has nothing to do with like the core business. And like, you build like, you make movies or something. I don't know, like you do random shit that has nothing to do with making money or profiting. And I think that that's kind of a really good way that companies should be thinking about these next like 3 to 6 months, is like doubling down on the stuff that got you there and to begin with.
Yeah, I totally agree with that. And, I think it just goes back to just business 101. Like, if you're spending $1 and you're not making more than $1, what the fuck are you doing? like what? Like, so you need to figure out, every dollar into the business, needs to have, a line of sight towards ideally 3, 4, 5 in return.
Do you think the founders that raise this shit ton of money that never really had to think that way can make that switch that quickly? Or do you think it's a very small percentage that are going to be able to like kind of shift their mentality so far into that direction to be sustainable on their own?
It's a good question. I mean, there's a lot. I mean, there's a lot of amazing. I mean, just raising hundreds of millions of dollars is not easy to do. So, I mean, if you're able to do that, it's a skill set in its own. But if you can combine that with putting together a good team, because it's really the team that's going to carry you through it as a founder, at least for me. So yeah, absolutely. I think if they're able to, realize the situation they're in, and then this is kind of the capital that they have to work with over the next decade. Like, let's use a hypothetical example. You raise $1 billion valuation, you're not worth that. You go on MicroAcquire, you'll probably get a $20 million offer. So you got to grow into that valuation. And so you have a ton of capital on hand. If you're operating under the assumption that you're never going to raise again, which is what I think every startup should do if they do decide to raise capital, is act like it's this is the only capital you're ever going to raise again. It changes your thinking. So instead of like, do we need a head of partnerships? Well, if that's not like a key strategy, then the answer is clearly no. Or do we need a, extra, data analyst for my engineering team to help them? Again, going back to like, is that a hell no or a hell yes? Like, kind of, if you're able to operate where everyone's kind of mission critical, I think absolutely they'll do fine and they'll grow into their valuation. But it still comes down to, with these large valuations, you need a large market, you need flawless execution, and you need a little bit of luck to get there. That's kind of the recipe of, building a truly valued $1 billion company that someone would actually acquire it for $1 billion, in my opinion.
How's it been different this time for you that you guys raised what, like 11 point something million or something total? Do you change your philosophy or mentality about running the business, or is it just, hey, now we have more resources, more cushion to, more credibility? Like, what has it meant for you this time versus, the past, not doing it that way?
Yeah, good question. I think when you give that much capital to someone who's bootstrapped a business, it can go a long ways. We're very capital efficient in terms of just the things that we do.
How many people are on the team? Like 40, 35?
No, like 20.
20.
And then we have a number of like contractors that I've brought over from business apps, just people I've met through the years, like video editors. So it can look like we have a lot of people, but we use just a lot of just really talented contractors, agencies. So these are what I call variable costs. Yep. So if things get really bad and we need to reduce on spend, we don't have to do any layoffs or anything like that. But in terms of, how I'm operating the business now, the problem that we're trying to solve is so much bigger. And there's so many different components of it, from, legal doc creation to helping with due diligence, which is, financial analysis of the health of a business, to transferring assets, to escrow, to there's so many parts of an acquisition, and we're building products for each step of the acquisition that could kind of be a company in its own. So it's a big meaty problem, but I guess the way I'd kind of put it is two things. One, comparing bootstrapping to like venture capital, I always say, if you want to get rich, bootstrap. If you want to change the market, raise venture capital. And, I guess what happened to me is, your risk appetite kind of increases after you've had a little bit of success. Like, you want to swing bigger, you want to build something almost kind of, it's less about the money and it's more about the impact. I know that sounds cheesy as hell. But that's kind of been the fun part about MicroAcquire is, we get the opportunity to really build out something that people have tried to build out in the past, but is a very capital intensive business to build out.
What makes it capital intensive? Like, could you have done it, or could you do it without the capital?
Um, yeah, I mean, you could build any business without the capital,
Just a matter of
but
time frame. Things just take longer in general.
yeah, you're not able, I mean, raising capital just allows you to hire the people you need to accelerate the problems you're trying to solve. Venture capital is just really a tool to accelerate growth. And so if you don't have a plan of how you're going to accelerate growth with the capital, do not raise capital because you and your whole team and your investors and probably your customers are going to be disappointed. Slow growth can sometimes be, one of the best things for a lot of different startups. Sometimes it takes a long time to find product market fit. And I bootstrapped MicroAcquire to about like 700,000 in annual recurring revenue. So, we had found, somewhat of strong product market fit, big market, no innovation in over a decade.
What's the websites like Biz Buy Sell or something? Like I remember looking at some of these for like buying, physical businesses and stuff. Like where was this even happening?
Yeah, it's just, our main competition in my mind is really just the status quo, which is, investment banks, who typically won't work with businesses below, let's say, 20 million enterprise value.
I mean, you're kind of creating a new market in a way. I mean, a lot of these companies didn't really have an option, right?
In a way, yeah. That's kind of like our goal is we don't want to, I always tell my team, we don't want to participate in the M&A market. We want to create the market. We want to standardize the market. We want to, have an impact where it kind of unveils all the mystery behind what goes into an acquisition, how to prepare for an acquisition, every way from finding a buyer all the way to, having the transaction closed and money wired into your account. And that whole process has so many different steps and there's so many different ways to do an acquisition and so many different, legal terms, earnouts, it's a lot. So we're taking this big, meaty problem that, I hope every startup goes through at one point, because it can be completely life-changing, but it's confusing and your other options are to pay someone a boatload of money. And I believe we can build tools that automate a lot of the processes that those individuals do.
Do you look at like any analog companies for like inspiration of like building that kind of full stack experience? Like to me, I think like Open Door is kind of similar in a way because, you're buying a property, they're helping you value that property. They're helping you with the whole, legal process from start to finish. Like there's a lot of similarities there. Do you look at analogs or you just kind of do your thing?
Yeah, I think the reference I usually use the most is Zillow, because we have things like data-driven valuations. We have advisors that you can hire within MicroAcquire, so that'd be like a realtor. Zillow has like Zestimates, which there's been some criticism over the accuracy, but we'll disregard that. But what we want to do is we want to bring this whole market together in one place where we have all of the buyers and all of the startups as just one central place, for people looking for acquisitions and startups looking to find buyers.
Yep. You talked about like some headwinds or tailwinds potential. Like what do you think is the bull case and bear case like over this next 12 months, for you guys? Like,
Yeah, the bear case I'll start with the bear case. I mean, if we go into like a really, really deep recession, no one's going to have money to acquire companies. But one conversation that kind of skews that is we had a lot of venture capital activity, like record venture capital activity, but there was a lot of private equity firms sitting on the sidelines saying this is crazy and we're waiting for this moment.
Yep.
So that kind of plays into the bull case as well, where, once valuations kind of normalize and get to a point of, where they've been kind of inflated over the past couple of years and they get back to where, maybe where I sold my business or what standard private equity multiples are, we could see a large increase in acquisition. So, and then to add to that, there might be a lot of startups that need soft landings. And in the past, startups would just shut down. They'd have great customers, have a great product, they'd have a great team, and they just say, hey, we're done. But with MicroAcquire, we can help them with a soft landing, acqui-hire, strategic partner, you name it. So I think that could also be a tailwind, but that also kind of plays into the bear case. So, there's so many moving dynamics that could come into play, and it'll be interesting to see how it all plays out. But if I had to predict where we're headed, I'd say, again, I'm an optimist, so I'd say probably it's not going to be as bad as everyone thinks it's going to be. And maybe I'm completely wrong and I'm just blindly optimistic, but I think great companies are going to keep growing. I think, companies that, were really never meant to, receive large amounts of funding, they're going to struggle because you can't really buy your way to product market fit. I guess you can in a sense. We can make an argument around that, but I think this is going to be a good time for just people to build sustainable businesses. I mean, the bar went from build the most highly valued thing ever in the world to just stay alive. So like on a dime, it's like, and then in 3 months, what's it going to be? So that's why I kind of tune out the noise and I just keep building.
What's like the makeup of the buyers on the platform? Is it mostly institutional? Is it individuals that want to, buy businesses and turn them into flip them kind of? Like, have you had boomerang like sales where somebody bought it and flipped it again on MicroAcquire?
Oh yeah. Countless times. We have numerous everyone from multi-billion-dollar private equity firms, a firm that bought business apps is an active buyer on, and they're like a $10 billion private equity fund. Pretty much every private equity fund I'm aware of. Lots of roll-up plays, lots of aggregators, lots of VC-backed companies, lots of public corp dev teams.
Is there a lot of just individual like entrepreneurs too that just want to buy small businesses?
Yeah, and that's probably my favorite segment too, because it's kind of entrepreneurship through acquisition, where basically they don't have an idea, they don't want to go through 2 years of chewing glass and like thinking of getting those first customers, and they can buy product market fit and apply what they're best at, whether that's marketing or sales or whatever it may be in the business. They can optimize it and then have a startup. And then one of the main reasons that a lot of startups sell on MicroAcquire, and this is one of my favorite parts about the business, is a lot of founders are just selling businesses to work on something bigger. And so they'll sell, like one story that I love to share is Derek Hallman. He sold a company called Median to an individual named Spencer for, let's call it like $500,000 or something like that. And Derek is now working on a new company called Workshop. And it looks like it's a great product. They already have, a really good team put together, and they're swinging big. And they took that initial capital from selling this product that they had made and use it as seed funding. And now Spencer, the buyer on the other end, is super happy. He's like, I'm going to grow this business. He's already increased revenue, secured some nice enterprise accounts. So I see a lot of situations like that where we kind of unlock founders from, assets they may have just kind of let die, and they liquidate them over to someone who could breathe some new energy and air into it to help them grow.
Are you seeing like an industry of like kind of aggregators pop up specifically for MicroAcquire? It's like, hey, I'm going to build the Thrasio of MicroAcquire, where I'm going to buy 3 to 4 to 5 small micro SaaS companies. Like, and I'm specifically starting this because MicroAcquire has, made it possible.
Yeah, Shopify apps, 100%. Like, I can't even tell you how many Shopify app aggregators I've talked to in the last month. Probably 50 plus.
That's awesome. And a lot of them have started as a result of like, hey, you guys have created this like more liquid market where it's just easier to find these, sellers and stuff.
I wouldn't say it's the result of MicroAcquire. Like one raised 175 million specifically to acquire Shopify applications. Starts with E. I can't remember off the top of my head. But yeah, I mean, we see a ton of Shopify apps acquired on MicroAcquire, listed weekly. So we're a good deal source for them, but I don't think they looked at MicroAcquire and were like, we're going to do this because of you, MicroAcquire. But
well, not yet, but I do think that over the next year, 2 years, you'll see more propensity to start those types of businesses, possibly because you're just creating this market that's a lot more dynamic, to find these opportunities.
Yeah, one thing I'll think that I think is gonna been really fun about MicroAcquire is just how many businesses with just the word micro in front of it have popped up. Like there's micro startup, there's micro fund, there's micro ventures, there's micro, all this micro stuff. So which I think is rad. It's like, yeah, if you build a company to,
micro aggregator, that's the next one. I'm going to start that one.
Yeah, micro up, micro swag up. I don't know.
Micro roll up,
micro swag up, and you make baby apparel. But yeah, I think it's been cool to just kind of bring sort of some light and encouragement to people building, sustainable businesses, foregoing venture capital, and just really shooting for, a small 7-figure outcome. And in Silicon Valley, traditionally, that's like, oh, that's like cute, but in reality, that's life-changing money. No. And I think me, that's just like the thing that just kind of bothers me the most.
You ever see Keith Roboy on Twitter? He says, unless you build a $10 billion+ business, it's not interesting to him. He doesn't care. And you have no right to say anything because you haven't built a real business.
Yeah, well, I mean, that's badass. I mean, I can't really comment on, his opinions or his operating ability, because he has built, multiple billion-dollar businesses. So he knows what he's doing, but that's his flavor. He likes to build billion-dollar businesses. And I think that's cool too. So I'm also, I want to make it clear, I'm not like bootstrap is the only thing you should ever do. It's like a religion, like get it tattooed on your back, like freedom, like, I think venture, bootstrapped, whatever, if you're in the arena, like I'm rooting for you. But the point I was trying to make is I think it's just been really nice to see just more discussion around, what entrepreneurship really is and what is the most practical and realistic path towards success as an entrepreneur, especially as a first-time founder. Because if you're reading about, billion-dollar headlines of, unicorns, got to get into YC, it got to get written about in these magazines, I need these VC funds to invest in me. If you're 22, 23, 24, that's your view of what success is as an entrepreneur, but that couldn't be further from the truth. Like, success is defined by you. And I think just the more discussion around, it's actually really badass if you sell a business for $5 million.
For $500,000 is pretty crazy.
For 50,000. Like, another story I love to share is there's an individual in India who sold a company for about $500,000. It was a platform that helped people pass coding exams for like FANG companies like Google, Apple, Facebook. And the kid's set for life, maybe not for life, but in India, that money goes a very, 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 very long ways. And he wrote me the most heartfelt email just saying he paid off his debt, he bought his mom a house. So like, to me, that's what real entrepreneurship is. And for the majority of entrepreneurs, like if you just think of the stats, and this applies to me too, like MicroAcquire, if we want to, become a unicorn and, we want to build a very impactful company, our chances are like 1%. I trust me, I know the odds. I, understood exactly what I was getting myself into. But I think what's unfortunate about the narrative in Silicon Valley is, a lot of entrepreneurs kind of go into building a startup, raise funding, and they don't really know what they're getting themselves into. And they end up regretting it later, and they just created a job they hate. And what they really should have done is, really research into what they want out of the startup. And what I mean by that is, do you just want to make a few $1,000,000? That was me with my first company. Like, I didn't grow up with too much. I just like wanted to build a company. Some kids want to be, quarterback of a professional football team. I wanted to be the CEO of a company. And I just wanted to get rich and build have a better life for my family. And, that was my goal. Obviously there was a lot of, positive impact regardless of whatever business you build, but that was my goal. And, now it's more just to help as many entrepreneurs. Like, it's even funny to think about, but entrepreneurs have made far more in terms of revenue than MicroAcquire, the company itself, just from using it, because we've helped facilitate over $500 million in acquisitions. And I think just having that impact and being able to mint that many millionaires. I mean, we didn't build their startups or anything. We just kind of helped them at the end.
It's like very Shopify-esque, arm the rebels. Like the ecosystem's value is where we're valuable, not where we're, our revenues are ourselves,
Yeah, exactly. And so, the point I'm making is just understand like what you want out of the startup. So with business apps, we had a ton of offers for, raising venture capital and all that stuff. And, we always just kind of felt like, we were profitable, we were growing, we just didn't know what to do with the money. I was young. And so I was like, I don't want to get involved in something like this early. And so I said no. And then we just basically, continued to grow the company, and it worked out well. Now fast forward to I'm 33 now, after 2 different startups, my risk appetite is a little higher. I'm, looking to swing a little bit bigger and see if I can have, a company that really changes the market forever for the better.
Yep.
So I guess, point is, think hard about that. Like if you just want to make a couple million, the actions that you take are going to be dramatically different than if you want to build, a market shifting, category, a new category business, or whatever you want to define it as. And then hold those actions ruthlessly. What I mean by that is if you're only
pick
after, what's that?
Like pick a side, decide who you want to be, and then
and then stick to that. Don't like get swayed, or kind of courted if your business is doing. I'm sure you kind of have gotten this a ton of times where investors are just hitting you up, and you gotta stay to your core of what you want to get out of the startup. And then more importantly, you can always shift gears. Like you can always shift gears once you're at a certain point where the business is stable and you're like, damn, I really got something on my hands. Should I sell it or should I go bigger? Like you don't have to make that decision to lock yourself into, this, hey, go climb Mount Everest now, first time founder.
That's what happened to us. I mean, the first 4 years was like, this is not a venture backable type of company, and we're just going to bootstrap it. And then over time, you start to uncover the market, the opportunity, different ways that you can build a much bigger business. And then you make that decision like, okay, do we want to go after that? And then, okay, if we do, what are our options? But you don't have to commit to it right away, like you said.
Yeah. And I think that's one of the biggest mistakes entrepreneurs do is they start a company and step 2 is go raise money. Really should be, work within constraints and go find customers to see if this, like, how big of an opportunity is this? Like, how far do you think you can take this business? Like, are you being pulled by the market? There's so many different things that you can, really do in advance of raising, any sort of capital to make sure it's the right decision for you.
Also, early capital too is the most expensive capital because it's the highest risk. So if you can de-risk the business for like 6 months and try to scrape by, you're going to save yourself so much dilution too.
Oh yeah, that's what I did with MicroAcquire. Exactly. I mean, it was just me with MicroAcquire for the first year and a half, dude. I was doing like customer support, newsletters, social, podcasts, product development, sales, taking out the trash, Like, but I enjoyed the business so much because it's kind of like I just get to see cool businesses all the time.
It also gives you the understanding of how to run all different parts of it. So then you can then go hire people and help them scale their part, and you understand what you're looking for, versus like right out the gate, you just hire people to like run this side and you don't even know how to do it or how to make it successful.
I couldn't agree more. And that rarely works. Like the biggest mistake I see is like, technical founder hires, a sales lead without any sort of like, hey, just figure out sales. It's just such a hard job because you don't know the product as well. You might not be as passionate. You aren't able to make sort of like on the fly decisions of, okay, maybe the pricing's a little bit off. Like, you as a founder, I think there's a lot of power when you're able to say like, hey, I've done every role in this business and I can help you in every role in this business. So just reach out if you have any questions or, this is kind of what I've seen work in the past. And that's how you really build a team of, stars rather than just a team of A players. And the analogy there is, you want a team that's like passing the ball and sharing the knowledge, and then you're able to help coach and mentor, because that's really your job as CEO, is to ensure that your team has a clear direction and that when they need your help, you're there to be there. And then also you provide them with everything they need to be successful.
Yep, for sure. Well, last few questions. I mean, one, I think also just given the economic environment, there's an interesting kind of play for like, let's say you get laid off at Meta or something, you're an engineer at Meta, maybe your other option instead of going back to some other tech company is maybe I build my own SaaS app and sell it in 6 months for 500 grand or 600 grand instead of like going to get a job. Like that's a potential interesting path for somebody that has that skill set, which maybe wasn't available before.
Yeah. And I hope people do that because, it might not work out, but you'll definitely feel more alive. Like, again, I'm very biased in terms of entrepreneurship, but I think everyone should take a crack at entrepreneurship. And yeah, if you get laid off, instead of just sitting on your hands, build something. I mean, that's something you can add to your resume, like succeed or fail. I love seeing that stuff on because it shows initiative. It shows you have a passion. You can, figure stuff out. You can teach yourself different things. Because when you start a business, as you don't know, you're not a master at sales. You're not a master at marketing. You're not a master of finance. You're not a master at, you're doing one-on-ones with your direct reports. You're not a master at, laying out the strategy. Like you learn all this as you go. And so just putting in a few reps, building a startup just to learn is one of the best investments I think you can make in yourself.
Yep. And obviously there's a lot of talk about just like controlling costs right now in this environment, especially with the uncertainty. For a company like you guys, obviously a lot of your costs is just like personnel, engineering, but then obviously sales and marketing is always a big expense for a lot of companies. But I feel like you guys have done a good job of building like organic, viral kind of flywheels and doing social marketing that's free and doing, bootstrappers, which is not 100% free, but it's like content based and SEO. Like, are you pretty cognizantly trying to drive like efficient go to market that doesn't cost you much money, or do you guys spend a lot on that? Or, from an outsider's perspective, it seems like you're doing it pretty efficiently.
Yeah. I mean, you can't, it's hard to, wrap your head around how some venture companies, like how the fuck do you burn 5 million a month? Like, that to me, that just doesn't compute. Right now we're burning like low 6 figures, like let's call it like 100K. Like we're basically almost break even, and we'll probably have our first profitable month next month. So I'm always about building, high margin, sustainable businesses, because when you put constraints around, spending, and you don't try to spend your way out of every problem that you have, you build better businesses, in my opinion. Building on a budget can create a better product, create a better process, better, and then you also get a team of, individual contributors where you don't have managers and managers and managers. You have people who are actually, having an impact on the company. And I think that's just so much more of a rewarding experience for not just, the whole culture, but, the individual, all individuals within the company, because they know their work is actually, having a significant impact in moving the needle on the company.
Do you think it's expensive to get those types of people, or is it just a matter of like getting good at finding those types of people?
Getting good at finding this type of people. I could spot them a mile away.
Yeah.
Because you want the people that if they need a team to get stuff done, no, like no. You want people that really love startups. So when I interview people, I'm trying to figure out three things. I'm trying to figure out, number one, will I enjoy working with you? Two, would you do a good job? And then three, would you enjoy working at the company? That's it. Like, there's so many layers that onion that I try to break down, but I'm a true believer that if you put the right team together and you create the right environment for them to thrive, and you trust in them to make the right decisions and support them and encourage them to take risks and not have to get approval for every single decision, things move faster. And then you build this culture of speed of execution. And that's really like that's like the main advantage that startups have, is the speed at which you can execute. And so I'm always trying to coach my team, let's move fast. Let's have clear goals, plans. Let's remove the bureaucracy. Let's move the red tape. Let's work together. Again, we're passing the ball. We're learning from each other. Oh, you're out this week, well, I'll cover you. Like, those sorts of environments. And then we make it fun too. We don't take ourselves too seriously, if you haven't noticed, by our marketing or our branding.
Also, I mean, that also is just fundamentally helps you save a lot of money and be a much more efficient business, because you have a scrappy team that can kind of do a lot of different things, that can own projects from start to finish, and not just look to like, hey, I need to hire 2 more people to get everything done. And I imagine, as an outsider, do you incentivize them through equity to kind of think more as an owner in general?
Yeah, everyone in the company has stock options. We have a stock option bonus that we're rolling out Q3 and possibly Q4. We're debating right now whether we do cash or more equity. But yeah, there's that principal agent problem where basically, you want people in your company to feel like, if this company succeeds, they succeed too. And so we all win together, both, personally, professionally, and financially. I think that's critical. You shouldn't be someone who just takes, one pet peeve of mine is when I see bootstrap companies that are like, oh, I own 100% of my business. And I'm just like, dude, there's like people in your business that are, unless you're doing everything, you want to be generous with your equity, and you want to be generous to your employees. Because I can tell you, at the end of the road, and for entrepreneurs that weren't generous to their employees, they regret that, because you only need so much money. Like, you don't need, unless you need like a private jet or something like that, then keep all the equity. But be generous to your employees, treat them well, and then they'll return the favor, and then probably help you build a bigger company. So it's kind of counterintuitive, but you can own 100% of your bootstrap business, or you can incentivize your employees with stock options. And then I would make the argument that your business would probably be more valuable because you get more productivity out of your employees. If you just do that across the whole company and you're able to squeeze 20 to 30% more productivity out, I mean, that right there is, quite a bit more with little to no extra overhead.
Yep. I got 2 last questions. One is that you share metrics a lot publicly. So I imagine, metrics are a big part of just performance at the company, and just being very transparent about it, and everybody at the company kind of knowing the ins and outs of the business. Like, how important is that for the culture that you're trying to build?
Yeah, it's one of our core values, transparency, not just internally, but externally, because I think acquisitions has historically been this market of, you never hear about a sub $10 million acquisition. What did it sell for? What was the valuation? What kind of company was it? Obviously, we don't disclose, public details or private details, but just unveiling sort of like, this is kind of what acquisitions are like, I think is really important. And then we have dashboards that we've created we basically live in HubSpot. So you can see on a rolling basis how many, buyers are signing up, how many acquisitions are coming through, how many letter of intents are being created. Every single metric you want to know, you can just log in HubSpot and look. So I don't have to show you. I basically show employees, this is where you find everything. And these are my 3 favorite dashboards. And my 3 favorite dashboards are our publishing metrics. We have a trove of data on just acquisitions. And then obviously marketing, and then just marketplace publishing, in terms of what types of startups are listing, what are they listing at, what are they, what kind of offers are they receiving, what's kind of like the pipeline looking like towards close. So yeah, definitely. I think, and also this goes with capital too. Like where are you in terms of like your zero burn rate? Like we're basically, how far away are you from your your path to profitability? Or on the other side, what's your cash zero date? Like if you're burning 5 million a month, like you should tell your employees like, hey, we have 8 months left of runway. Because when you try to hide problems, like you don't give your team a chance to help you fix those problems. And so, yeah, transparency, I think, is huge, good or bad.
Yep. The last question, like if you're, for the founders out there that are running businesses that are, they're running out of venture money, they're not sure if they're going to be able to raise it, or even, they're a bootstrap business and, their market is getting hit by some sort of economic kind of uncertainty right now. What would be your number one piece of advice for them to kind of get into the clear over the next, 6 to 12 months?
That's a really tough one. First thing I would do is I would get a mentor, in terms of someone I can really trust. It's not an investor who has a financial incentive on the business. So like a CEO coach, or just someone who has experience that can really you can tell them how you're feeling, because you're probably stressed the fuck out if that's your situation. And then you may have to make some really hard decisions. And that might mean doing a layoff. That might mean, but you need to lay out, your options. Like one could be, the cockroach plan, like, we're basically going into a bunker for 4 years just to stay alive. Or it could be on the whole other spectrum of, what, I think we made a mistake and we're not going to make it. And it's probably best that we wind this company down professionally, pay all the employee severance, give them a heads up. Because the worst thing that one of the worst things I hate seeing is just companies fold and just leaving all their employees hanging, because if your company's going south, well in advance. And so having a plan for every one of those situations. But it's a tough one, but I think you need someone in your corner that you can talk to outside of your co-founders and outside of just anyone who can, listen to you and give you honest advice of what they would do, knowing the full picture, because there's so many variables in terms of so I don't have a direct answer of hey, cut 30% and then do this, or just where the headspace of the entrepreneur is at. I think that's equally as important. Like if this is the business they want to run for the decade, their actions are going to be a little bit different. If this is a business where maybe they thought it was more of an opportunistic play, their actions are probably going to be a little bit different. So those are honest conversations I'd recommend having with, some sort of mentor or advisor, and then creating a plan from there.
No, it's so helpful to have somebody that you can just be super straight up with and just say, hey, I'm struggling, or I don't know what to do, or, I'm nervous or scared or whatever. And just be able to talk through that.
Dude, it's a number. So I have a CEO coach that I've worked with for the past decade. And I can't even tell you how many times he's helped me through. Sometimes we'll start meetings, I'm like, everything's good. And then he pulls
by
something
the end,
out.
Broken down.
Well, no, not like that. More just I always say he's kind of like my left offensive tackle, where he sees my blind spots, because he'll ask me questions like, oh, how's this department going? And I'm like, oh, it's going good. He's like, what does that mean? Well, yeah, I have this person running it, and he said this. He's like, well, do you really know? Or are you just kind of blindly, stuff like that, where I'm like, oh, maybe I should dive in a little bit more. So, there's always someone that could spot your blind spots. And that's why I can't recommend a CEO coach or a mentor more.
Love it. Awesome. Well, Really enjoyed the talk. I think that your business is in a very interesting spot, kind of in this economic environment where it could play a really big role for a lot of companies. So I'm going to be interested to kind of follow along and see how things go. And hopefully you pass the 1,000 mark, right? I think the goal this year is 1,000 companies acquired on the platform, right?
We're on pace. When I actually put that out, I was like, "There's no way," and then now we're on pace. But yeah, appreciate the chat, and we'll definitely keep sharing as the time goes on, so everyone's kind of in the loop on what we're seeing and stuff like that, so they can make better decisions, because we do kind of have a unique insight into a certain segment of the market. But yeah, man, thanks for having me on. Great chat.
I enjoyed it. Thanks for having me.
Thanks for listening to the Out of the Woods podcast. Don't forget to subscribe if you haven't already. More episodes are on the way. If you want to keep the conversation going, suggest questions, or nominate guests for future episodes, you can reach me on Twitter at Michael Martocci. Good luck and see you next time.